And welcome back to Central Valley Talk, Central Valley Real Estate and Home Improvement Show. We come here every Thursday at this time and introduce you to a professional in the industry that we ask a million questions to so we can figure out what's going on. And our guest today is Elijah Orozco. Hey, Elijah, what's the name of your company?
Hi, my company's name is CrossCountry Mortgage.
CrossCountry Mortgage. Okay, and is it a good time to buy? Are interest rates still low?
Yeah, interest rates still are at our all-time bottom. However, a warning, because the Federal Reserve did make an announcement last week, which is going to change interest rates, and interest rates have already turned. So while they're still at a bottom, with them changing their course on inflation, we do expect interest rates to start going up, which that has already started.
Well, that gives us a simple thing to say then. If you're going to buy a house, call Elijah Orozco now before they go up. Get your interest rate locked in and things like that. So
you'll kick yourself forever if you don't jump in now.
Yeah, the lowest ever. So now, so it's a good time to buy then because interest rates are low. But people got to call the lender first. People like to go look at houses and pick one out, then they call a lender, and sometimes it takes a couple of weeks to get approved. And you should get approved beforehand, isn't that right? Like pre-approved?
Yeah, absolutely. So you want to know exactly how much you qualify. A lot of people don't realize that here in California, there are 986 different loan programs. How do you know which one is going to be best for your family? Let's find out all those things. And just like when you got an airplane and the pilot or the stewardess will say, hey, buckle up, we don't expect turbulence, but it might happen. Well, we like to do the same thing with you. We don't expect any problems, but it's good to find out all those things ahead of time. Yeah, don't take off before you find out those things.
Yeah, don't. The houses are selling so fast right now. I see so many people get disappointed because they go look at the house, they find the perfect house, then they apply for the loan, and, you know, it's backwards. Talk to Elijah first, I'm telling you guys.
Yeah, absolutely. And with the market being as hot as it is right now, you can't afford for any glitches or mistakes. You need to find out all those things ahead of time. Fresno market is on fire.
Yeah. Now,
literally and non-literally.
You said there's over 900 different loan programs in California, but you told me about a new one that's just coming out as well.
Yeah, so we just rolled out another one today. So one of the most difficult challenges is that people save money for a down payment, and then they didn't realize that there's an additional cost that buyers are responsible for called closing costs. That can be an additional 3% of the purchase price. And if you're unprepared for that, well, that can prevent you from buying. So we do have a new program that we just rolled out today. It will cover your down payment and give you a grant for your closing costs. It's only available here in California. We just barely got the details today. Give me a message, IM me, and I could see what it can do for you.
So, as you're saying, the hard part is saving up the down payment, and then often people are surprised that they have to pay closing costs too, which is another 3%. But you're saying there is a program out there just for Californians that could cover all of that.
Exactly. Take advantage of it while you can.
Yeah, if there's renters out there right now, they ought to step up and take advantage of this.
Yeah, absolutely. I mean, especially with the pandemic, a lot of people are tired of paying other people's mortgage, not having the space, not having room for working from home, not being able to make any changes to the house. Let's change that now, put you in a home. One of the biggest sources of stress for Americans is finance. So we like to alleviate that financial stress through home ownership while simultaneously building wealth for your family.
Yeah, that's really the only way for people, wage earners, to build wealth is to buy a house.
Absolutely.
Unless you're a really, really good saver and you make a lot of money, the house, the wealth builds for you through equity and inflation and things like that. Now, I want to ask you, you sent in some slides that are very interesting. I want to ask you about those in a minute. Before we get into that, how do people reach you? What's the best way to get a hold of Elijah?
The best way is to go to my website, crosscountrymortgage.com/Elijah-Orozco. That could be really long, so you can always just reach me on social media, Elijah Orozco. I'm on Twitter, Instagram, Facebook, whatever's easier for you.
Elijah Orozco. Just Google that, or Country Club Mortgage, Elijah Orozco.
CrossCountry Mortgage.
CrossCountry. Sorry, wrong one.
You're already thinking about the country club.
Yeah. Now, and if you guys really, if you didn't write this down, you can't reach him, call me. I'll give you Elijah's direct number if that's okay. Elijah? Can I do
Absolutely, I
that?
would love that. Thank
Yeah,
you.
I keep his number on my desk. I send my real estate clients to him, and I recommend you guys go talk
Thank
to
you
him
so
as
much
well.
for that.
All right, I looked at these slides. Tell us about the slides. We'll go through them. They're in alphabetical order. I don't know. Can you see them?
Yeah, thank you.
Can you see what we have on the screen from where you are, Elijah?
I Not yet, but it's probably going to be load soon. So one of the biggest things that I hear in the market is that people either are scared that the pricing is going to go up more, or they're wanting to wait because they think that the market is going to drop. I can see them. So one of the things that we like to address is numbers. One of the things I love about numbers, Mike, is that numbers can't lie. People can lie to you all day long, but numbers don't. So I like to look at the demographics, look at the trends, and see what's happening with numbers, what's really going to happen in the market.
Okay,
So
now.
we compiled this housing outlook. This is for the US, and if you go to the very next slide, you find that there's a trend that people are taking longer to get married. Right now, people are waiting almost 30 years to 30 years old before they get married. And when you think about that, the number is very influential because very often the next step is to have children. So looking at the next slide, children drive single family living. So if you're a 30-something-year-old, for those of you that have no children, the homeownership rate is about 38%. But once you have at least one child, that number changes to 80%.
So
It makes sense.
you're
Once
living
you
in an
have a
apartment.
kid,
You're living in an apartment before then. Before you start having kids, most of the people live in an apartment.
life changes. Now you're an adult. It's called adulting. Time to get into a home. It's a different lifestyle, and it's hard to do that when you're paying someone else's mortgage. So where is that going? If you look at the next slide, Google's been tracking trends on Google searches since 2004. Well, what's one of the biggest searches right now? Baby registry. There's been a sudden surge in Google searches for baby registry, indicating that people are either considering having a kid or currently having one. And since the pandemic, there's been a big spike in baby registries. Hey, you blame it on the stay-at-home restrictions. People are finding things to do, and it looks like making babies is one of them. What's that going to do? Well, when people have kids in their homes, it's going to put them towards home ownership. If you look at the next slide, talking about the COVID is having a big impact on the market as well. So we are in a post-COVID era. We're seeing a drop in population growth in urban areas and an increase to the next outer ring, which is called suburban areas. Well, there's actually an even further ring called exurbs. And for the first time in 50 years, we're seeing a reverse trend where people who were once living exurbs, well, we're seeing a mass exodus into the exurbs. And it has a lot to do with people wanting that more space, wanting to have that distance. The current COVID landscape has really changed the mindset of what consumers want in a home. And it makes sense when you think about it, right? Going to the next slide, this is how we really like to look into what the housing bubble. So many people say home prices are going up. Others are saying we're entering a housing bubble. What is a housing bubble? How does that look like? Well, when you look at the last one, it was in 2007. Back in 2007, homes had an all-time peak in this country of 3.7 million homes for sale. That was a lot of homes for sale. There just was way too many properties and oversupply and not enough demand to meet that. Well, now you look here in 2020, we are at a 40-year low of housing inventory. There's 1.8 million homes for sale, despite an increase in our population. So does that look like a housing bubble? Not at all. So we know that we need to build more houses to meet the supply. Well, if you look at the next slide, when you look at the construction of new homes, for the past decade, construction has been increasing for new homes. But there was immediately sharp decrease in supply once COVID hit. That's further exacerbating the inventory problem. Meanwhile, demand continues to increase, signaling further increase in prices. So the bottom line, that means that if you are out looking for a home, you are going to have to pay above asking price to get into a home many times to win those bidding wars. So if this isn't convincing enough, well, if you go to the next slide, we'd like to talk about the price to rent ratio. This is a different metric to measure where the market is. The price to rent ratio, if you look at the very top, currently is 17 times its annual rent equivalent. I'll break down what that means. So for example, you're paying $1,000 per month. After a year, 12 months, that's $12,000 you spent in rent. Well, $12,000 times 17 is $100,000 $94,000 home value. A $300,000 home should rent for roughly $1,500. Well, when you go back to the last housing bubble, the peak in 2006 was a 24-to-1 ratio. So we are not anywhere near where you're looking at for housing bubble conditions of overpriced homes. So home buyers, brace yourselves. It's going to be a rough ride. Homeowners, congrats, you're getting more equity. And for those who are homeowners, I mean, we just have more and more good news. If you look at the next slide, where the equity is as a nation. The equity that people now have in their homes is just fantastic. The vast majority of homeowners in our country have at least 20% equity in their home. Very few people are upside down on their homes. Now, you go back to the housing crash where 25% of homeowners were underwater. Now, there are less than 4% of homeowners who have a mortgage are currently upside down. And remember, these are just numbers of people who have a mortgage. Let's take a look at the next slide, my final slide with the housing market. There's 124 million households or families in the United States of America. The majority of these households own homes. Now, when you look at that 80 million people who own homes, 30% of those households, they don't have a mortgage. Their house is paid off. They have nothing but equity in their home. They're good to go. Well, when we look at those who do have a mortgage, 66% or 53 million people have an average loan to value of 53%. That means that just about half of their house is paid off compared to what it's worth. Average equity there is $177,000, and that's just phenomenal. So with all these numbers, the bottom line is depreciation forecast for 2020 and beyond is that home prices are going to go up about 5% in our country. Now, that's overall. Of course, real estate markets are always local, and I can give you more specific numbers for our listeners depending on your specific zip code. Right now, I'm in downtown San Diego. We're expecting 1% here in San Diego, 40% appreciation over the next 5 years. I mean, that's just crazy. For those of us who are in Fresno, still great news. We're expecting a 6% appreciation as well and a 30% increase in home values. So it's a really great time to be a homeowner. There is no way faster, stronger, easier to build wealth in this country than home ownership.
You got me convinced. I want to buy another house. Yeah, your payments don't go up when you buy a house, but your rent is going to go up no matter what. If there's a housing bubble, no housing bubble, your rent's going to go up if you're renting houses. And as Elijah keeps saying, somebody's making a payment on that house. The landlord is paying for it, but you're making the landlord's payment for him. He's getting a house for free. So you should be buying a house for yourself, really, is the moral of the story here. Great time.
I'm so glad you brought that out. In fact, in the last 100 years in Fresno County, San Diego County as well, there has never been a decrease in rent prices.
Right.
At that same time, home prices kept going up. You need to get out of that routine. The first rung of building wealth is through a home.
Yeah. Well, I want to go over again. Elijah Orozco. He's a loan officer with CrossCountry Mortgage, and you can go to crosscountrymortgage.com/Elijah-Orozco. What else? Is there an easier way? That's a lot to type in.
So for those of you that are already on Facebook, you can just look my name up, Elijah Orozco. I'm on Instagram, especially those of you 35 and over. I know a lot of times you don't like to use Facebook, but you're already on Instagram. Just type up my name. My website is there. You can message me directly. I'll be the one that will be communicating with you directly if you reach out to me.
And the other way to find him is to call us here at Central Valley Talk, and we will put you in touch with him. Anything else you want to add, Elijah? That was a lot. I'm inspired.
That was a lot of information. I mean, I could go on all day long. It's an amazing time. Don't be scared. I mean, a lot of times I don't ever like to pressure a consumer into the largest financial transaction of their lives. However, the reality is if you do wait, you absolutely are going to pay more. Your house is going to cost more and your interest rate is going to go up. The Federal Reserve has reversed where they stand on inflation. That means interest rates are only going to go one way, and that's up.
Yeah, there's not much lower they can go. There's only one other direction. So buy now before it's too late. All right, Elijah, thanks for sharing all that information. It's very valuable and very illuminating as well. So maybe we'll see you. We'll have you back here in another couple of weeks.
Sounds good. Thank you so much for your time.
All right, we'll be back with more Central Valley Talk right after this.